Have you ever wondered why China, a global leader in the electric vehicle industry, suddenly stopped investing in India's automotive sector? Is it just trade tensions? Or is there something deeper driving these decisions? What could this mean for India's dreams of becoming a manufacturing powerhouse? Today, we're diving into the untold story behind the growing divide between two of Asia's largest economies, and why China may be pulling the plug on its automotive investments in India. For many years, India has positioned itself as a competitor to China. As both nations continue to rise, their strategies have taken very different paths. India has leaned heavily on strengthening ties with Western countries, while China has blazed its own trail, dominating industries like tech, manufacturing, and especially electric vehicles. But the competition between these two giants has turned sour recently, with India erecting various obstacles for Chinese auto companies and imposing hefty tariffs on Chinese steel imports. At first glance, it might look like just another chapter in the trade tensions between these two countries. However, beneath the surface, there's a strategic game at play, one that could have far-reaching consequences for both China and India. So, why is China no longer willing to invest in India's automotive industry? And how could this impact India's ambitious goals to become a global manufacturing leader? To understand the stakes, let's first look at how China's electric vehicle, EV industry became a global powerhouse. Over the past few years, China has achieved remarkable success in exporting its cars to more than 200 countries and regions. According to data from the China Automobile Association, from January to August 2024 alone, China's car exports hit a staggering 3.21 million, a 69% increase from the same period the previous year. What's fueling this growth? China's relentless drive towards global electrification. Chinese automakers are leveraging advanced technology, competitive pricing, and government support to make their vehicles a preferred choice worldwide. But as Chinese cars flood international markets, it's creating tension in places like India, where the local automobile industry struggles to keep up. India has long been trying to develop its own automotive sector, hoping to replicate China's success. The government has even relaxed foreign investment policies, inviting global automakers to set up shop in India. For example, foreign companies with less than a 15% stake no longer need pre-approval to invest, all in an effort to lure in international expertise. Back in 2019, there was considerable excitement when Tesla expressed interest in setting up a factory in India. It seemed like a dream match, a global EV giant entering a rapidly growing market. But after years of talks, the project has seen little progress. Some experts believe Tesla fears India's complex regulations and the potential for hefty fines, risks that might outweigh the rewards. Even China's EV giant, BYD, tried to get a foothold in India, with a $1 billion investment proposal in 2023 to build a large manufacturing base. But India shut it down, citing national security concerns. What's more, India wanted BYD to share its core technologies before allowing it to operate locally. BYD refused, pulling the plug on the deal. And it's not hard to see why India's rejection of BYD's proposal, along with the slow progress of Tesla, may have more to do with India's protectionism than with security concerns. Many believe that India is wary of Chinese cars entering its market in large numbers. Why? Because Chinese cars are incredibly cost-effective, up to 20% cheaper than their Western counterparts, with comparable technology and features. If allowed to enter the Indian market en masse, Chinese cars could dominate, making it almost impossible for India's nascent car industry to thrive. India's stance may also be influenced by its desire to align more closely with Western powers, who have been pushing back against China's expanding EV industry. For India, rejecting Chinese investment could be a way to strengthen ties with the West, even if it means slowing down its own automotive ambitions. But China isn't just sitting on the sidelines. In response to India's growing resistance, China has reportedly taken a drastic measure. In September 2024, reports surfaced that China is considering a new regulation that would prevent its automakers from transferring core technologies when building factories overseas, particularly in India. If implemented, this would be a major blow to India's hopes of using Chinese technology to fuel its own EV revolution. While the policy has not yet been officially confirmed, even the rumors have sent shockwaves through India. After all, without Chinese expertise and investment, India's EV industry could stagnate. The electrification process, which is already moving slowly, may grind to a halt. So, as China and India continue their economic tug-of-war, the question remains, will India find a way to stand on its own in the automotive world, or will it miss a crucial opportunity? What do you think? Thanks for watching, and until next time. Don't forget to subscribe and hit the notification bell so you never miss our updates.